What is an IFRS 8? Malaysian Financial Reporting Standard 8 stands for Operating Segment in Financial Statements, where an entity shall disclose information to enable users of it financial effect of the business activities in which it engages and the economic environment in which it operates. Next, operating segment is a component of an entity that first engages in business activities from which it earns revenue or incur expenses. Second, whose activities are regularly reviewed by the Chief Operating Decision Maker, CODM, for resource allocation and assess its performance. Third, for which its discrete financial information is available. Now, who is applicable to the standard? The standard is applicable to entities first whose equity or debt security are publicly traded, or in the process issuing securities to the public, or whose voluntarily providing segmental information. Next, this is a bit of Maybank background. Malayan Banking Berhad, or known as Maybank, was the first homegrown bank to serve Malaysian society. Maybank was founded by Singaporean business tycoon Tan Sri Tep Buat and Eugene Le. Back in 1960s, it were nicknamed Coffee Shop Bank because Maybank branches mostly occupied shop lots that were formerly coffee shop. For your information, Maybank is the largest public listed company on Bursa Malaysia. Now, let's talk about Chief of Decision Making, CODM. Every company has its own CODM. CODM is a role and not necessarily an individual. That role is for resource allocating and performance assessment of the operating segment of an entity. The decision maker could be a person such as CEO, COO, or a group of persons such as senior management team and board of directors. First, let's take a look at CODM in two publicly listed Malaysian companies. The first CODM of Maybank is Datuk Khairul Saleh Ramli, who is President and Group Chief Executive Officer. He is responsible to set and drive Maybank business strategy and value creation, leads the group exco to oversee performance and execution, and sit in the board of Maybank Indonesia and Maybank Singapore Limited, giving him direct influence over regional strategy. And the second one is CODM of Mobile, while Hentak, the Chief Executive Officer of Mobile. He is responsible for the company's overall strategic direction and operation to ensure Mobile remains competitive. He is also responsible for corporate growth and business outcome, ensuring operational efficiency and agility in a competitive telco landscape, and lastly managing senior leadership and making key executive decisions.
Now let's move to the types of segmental reports. There are two types of segmental reports found in Maybank, which are business segment reporting and geographical segment reporting. Maybank provides segmental reporting in its financial statements, categorizing its operation into distinct business segments. This approach offers stakeholders insight into the performance and financial health of each segment. In addition to business segments, Maybank also reports financial performance by geographical regions. These geographical breakdowns help in understanding the bank's performance across different markets. Let's see the example of business segment reporting from Maybank Annual Report. There are few group global banking in business segment. As you can see from the example provided, Group Community Financial Services has reported a total revenue of 8 million. For corporate banking and global market, it is 3 million. For investment banking, it is reported 385,000, asset management for 4,386, insurance and takaful for 1 million, and lastly, head office and other had reported of an expenses of 8,021. This is the example of geographical segment reporting. There are 15 countries in total related to loans, advances, and financing analyzed by geographical location, which are Malaysia, Singapore, Indonesia, Labuan Offshore, Hong Kong, US, China, Vietnam, UK, Brunei, Thailand, Cambodia, Philippines, Laos, and Myanmar. These are two key benefits we provided for segmental reporting. The first one is improved risk assessment, and the second one is a better decision making. What we meant by improved risk assessment is that segmental reporting can help shareholders in ascertaining risk present in specific segments. Consequently, this allows shareholders to decide on steps to reduce which risks which would ensure a long-term stability of the company. For better decision making, segmental reporting aids shareholders in making decisions based on the performance of individual segments. This includes strategic decisions relating to the company such as resources allocation, investment, and divestment.
What is MFRS 134? MFRS 134 is interim reporting. Interim reporting can be defined as a standard issued by the Malaysian Accounting Standard Board (MASB) that provide guidelines for the preparation of interim financial statement. MFRS 134 governs the preparation of interim financial statement typically or quarterly or half-year period in compliance with accounting principles used in financial statement. MFRS 134 require presenting condensed financial information including the statement of financial position, statement of profit or loss and other comprehensive income and disclosure on the significant event, changes in estimate and financial performance. MFRS 134 ensure interim report provide timely, relevant and comparable information aligning with IFRS requirement and promoting transparency between annual report. Significant event and transaction that affect an entity financial position and performance since the end of the last annual reporting period. First, impairment loss. The entity financial position may be impacted if it finds the current asset have been impaired during the interim period. In the financial position, it may reduce the carry amount of affected asset, carry value of the asset to be written down, and impairment loss to be shown in the income statement. This will lower the entity profit in the profit or loss and other comprehensive income. Significant event and transaction that affect a financial position and performance since the end of the last annual reporting period. First, final dividend declaration. Maybank declared and paid a second interim dividend of 32 cents per share, bringing the total dividend for final year 2024 to 61 cents. This shows Maybank's strong full-year performance and commitment to shareholder return. The effect of the statement of financial position, it will decrease in retained earnings under shareholder equity due to dividend distribution, and no impact on total asset, but it will reduce total equity. The effect of statement of profit or loss is no direct effect on profit since dividend are distribution of profit, no expense. Profit remains strong at RM 2.532 billion, contributing to final year 2024 profit of RM 10.089 billion. Meanwhile, the effect of statement of cash flow is on financing activity, payment of dividend and RM 7.2 billion in total reduced the bank cash balance but was part of planned capital management.
On 31st January 2024, Maybank successfully completed the issuance of RM 3 billion subordinate Sukuk Murabaha under its RM 30 billion Sukuk program. The transaction impacted the financial statement. In the statement of financial position, the issuance increased long-term liabilities by RM 3 billion while simultaneously boosting cash or cash equivalents by the same amount from the proceeds received. In the statement profit or loss, finance costs will increase due to periodic profit payment on Sukuk, which will reduce net profit over the time. In the statement of cash flow, the RM 3 billion proceeds are recorded as cash inflow under financing activities, depending on how the funds are utilized, such as for operations, asset acquisitions, or investment. Related outflow may appear under operating or financing activities. This is a reporting period and comparative analysis of the unaudited condensed income statement and comprehensive income prepared by Maybank Berhad. Let's begin with the reporting period and reporting date for each category. For the first category is current interim. The reporting period is in 3 months, starting from 1st October 2024 until 31st December 2024. For the current year to date, this covers a 12-month period from 1st January 2024 until 31st December 2024. For the comparative current interim, will begin from 1 October 2023 until 31st December 2023. This allows us to compare the current quarter performance with the same period in the previous year. Lastly, for the comparative year to date, the period spans 12 months from 1st January 2023 until 31st December 2023.